Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities. I'm delighted to host a Red Cloud webinar today on lithium. We will hear from E3 Metals CEO Chris Sternbo, the CEO. During today's webinar, Chris will provide an overview and outlook. Then we'll take some questions, so please type your questions into the text box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During the E3 Metals webinar, forward-looking statements may be made. I would direct listeners to their forward-looking statements outlined on page 2 of its corporate presentation, and that can be found on the company's website, e3metalscorp.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should really rely on their own investigation and seek their own professional advice before investing. So please take a look at our most recent research that's located on our website for specific disclosures on E3 Metals. So everyone here, I imagine, is familiar with the energy transition underway. With the growth of EVs and storage sector, we've seen investor interest in the battery metals pick up this year, particularly for lithium, as carbonate prices out of China are now up over $25,000 a ton. So we do need ways to produce that material and to scale up in a rather quick manner, and that's why we are here today. So I'm going to now turn it over to Chris to kick off today's webinar. Chris?
Excellent. Thanks for having me today on the Red Cloud platform. As David mentioned, I'm the CEO of E3 Metals Corp. Very happy to be chatting with you about this project, and really does, I think, in my mind, epitomize the energy transition in a lot of ways. When you look at this picture, and I really like this because it outlines what this project is all about. And it's actually behind me as well. This is a picture of our project site in South Central Alberta. And what it is, and what really represents, is the transition from oil and gas to lithium. Because if you peel back enough layers of E3 Metals, we are an oil and gas company here in the province. And that is because we operationally look just like oil and gas. If you look around this picture, you see farmers' fields, you see grid roads every mile, you see power lines, you see underground natural gas pipelines that are coming to surface through some facilities. You see oil and gas wellheads juxtaposed right against farmers' houses and within these farmers' fields. So outlines a very strong social license for the oil and gas industry here in Alberta. And I'll take you through operationally how we, as a lithium producer in Alberta, will produce our product and how that relates to oil and gas industry. So I think it's really important, a differentiator for E3. We also have forward-looking statements. These are on the slide deck and on our website for your reference. I suggest that you please have a look at your leisure. E3's growth strategy has been in place for the past couple of years. When we look at this from the perspective of where E3 has come from and where we're going, the key number one thing that E3 has been focused on for the past 4 years is the DeRisk technology. It is proprietary to E3. We've been developing it. It's gone from conception to lab, and now we're putting it through the commercialization phases. So there's a lot of work still to be done, but it does separate us out because this technology is ours. We've developed it, we own it, and it's been tested since its infancy on Alberta brines, on the brines from the Leduc Aquifer, which is our resource base. We aim to produce a battery quality product, and this is fairly rare in the market today. Very few out of the back of the mine or project site do you have a battery quality product. For us, because of the purity that our DeRisk technology is able to achieve in its one step, we can take that concentrate and turn it directly into a lithium product. We are aiming for hydroxide as our first product that we're going to put out the door. Operationally, this is where the Alberta environment comes in. The social license that's been established. We will eventually go out and we will drill our own wells for lithium production. And those wells will be drilled by oil and gas drilling companies here in the province. And it's just an example of where this will go from our perspective. when you take the technology and you combine it with our resource, it really outlines, I think, the two biggest competitive advantages we have. We have this one of the largest resources in the world at 7 million tons LCE. So that's lithium carbonate equivalent in the ground. And we are working on expanding that to M&I and getting that further refined. We've got lots of cash in the bank right now. We've got over $12 million. We have a very solid ESG story to tell, and I'll talk to you about that in a bit. And we've been building an impressive team here. So last year, around this time, we started a fundraising campaign that accumulated a total of a little over $14 million Canadian for the company. And since then, we've been putting together a very solid team headed by these people. So we've got the major management team, the management team on this slide deck. All of these people, save for Jonathan, are Alberta hires. So they've come out of the Alberta oil and gas industry. Chris Ward, I worked with back in 2006 at Petro-Canada, now Suncor, on a $17 billion capital project called the Fort Hills Project. He was one of the project managers on that. Peter Ratzlaff is a production engineer with 25 years experience moving fluids in Alberta. So these skill sets are already here. The one lone wolf on this is Jonathan Nielsen, who's not from Alberta. We brought him in from Salt Lake, and he's a lithium process expert. So that's the one thing that we don't have in Alberta, and we have brought in, obviously. Looking at the board and advisors, since we raised that $14 million, we've also been in the process of maturing our board of directors. So we brought on John Pandasopoulos and Kevin Station to the board. We also added Brad Wall to the advisory board as well. I'm sure that most of you are following the lithium space. David mentioned, prices as high as 25,000. Our thesis to the robustness of E3's business model being a lithium producer is backed on sort of two fundamental things that have happened that people have been talking about for a lot of years, but last year we saw them solidify. The one is that every major OEM in the world has committed to electrifying at least part or most of them their entire fleet. So we have now the electric vehicle in a real tangible way entering the marketplace. We're seeing adoptions in Europe at the teens right now and expected to grow substantially over the next 3 to 4 years. North America being slightly behind that, but still looking at major adoption by 2030 in North America even. The other piece of this that we've seen solidify is the lithium-ion battery. All of these cars are being powered or will be powered by the lithium-ion battery. The next generation battery, the lithium solid state, uses a bit more lithium, and it's still, the commodity is one of those rare development opportunities, because when you look at it from the perspective of the lithium market, now that we've sort of had that foundation set, lithium is not a very big market, especially battery quality lithium. Right now, the world produces roughly 350,000 tons. Rio Tinto came out a couple of weeks ago and was talking about 3 million tons of demand by 2030. That's a 10 times growth in the ability to produce this product. And as everybody knows, it takes a lot longer than that to go from discovery to mine. And especially it takes a lot longer to go from, the 2-year manufacturing to build a gigafactory to get a lithium battery out the door. And it shouldn't really surprise anybody that in the short term, you're going to see this supply-demand gap. For E3 Metals, when we did our preliminary economic assessment, we used 14,000. We didn't use 25,000. We still feel that there's extremely robust market, even though we anticipate our initial production coming in and being sold for much higher than our PEA outlined. It just demonstrates that this market is growing very rapidly. And lithium is a bit different than most of the other commodities that are going into the battery, because in and around 2030, over 90% of the lithium produced on the planet will likely be going into the battery industry. Whereas for some of the other commodities, it will not be that high. So you have a very specialty market coming in here, needing a very high quality specialty product. And so pure producers making that product are going to be in extreme high demand as we get going. So this is where E3 plans to step in and feed the market. So we look at producing a battery quality hydroxide at the back of our plant. We put out a preliminary economic assessment. So this is just an initial stage report, desktop study review of what the value of the project could be. And it really turned the tide for E3 because we are able to outline that with this massive resource that we have underfoot and 75 milligrams per liter, we're able to make a very, very robust project here in the province. So $1.1 billion NPV, that's US dollars pre-tax, or $820 million after tax, with a $600 million capital spend. One of the big numbers that I really am proud of is the OPEX. So we've been able to develop this project using, a lot of sort of sacrificing a bit of capital to put in a really solid operating cost of $3,656 per ton. It's one of the bottom end of the lower quartile for operating costs for a battery quality hydroxide product, which means a very strong, robust company as price fluctuates in the future will be able to withstand that and keep our operations alive and also expanding. This is where we start to look like an oil and gas company. So if you were producing oil and this is conventional oil, so not oil sands, but conventional oil in the province today, you would have a well, you would have a series of wells. You would be producing fluids from those wells. If you're producing a little bit of oil from the Leduc today, it would be 98% water, 2% oil. You're shipping that through a pipeline to a central facility where you're extracting the oil out of the brine and you're putting the brine back into the aquifer. From a lithium production standpoint, we will be doing the exact same thing in the future. We will produce brine from the aquifer, bring it to a central facility. We'll extract the lithium out of that brine using our DLE technology and put the brine back down. So operationally, that activity is happening today in the Leduc aquifer. And it's a very important part of this because, like I mentioned, we'll be able to use the same drill rigs, the same service companies, the same expertise, the same professionals. We also have a very well-defined permitting regime that we anticipate falling under, a very well-defined social license here in the province, which is extremely important. And you're seeing this all the time, having companies unsure of their ability to go forward based on that social aspect. And this is a very commonplace type of development here locally in an industry-prone province. So we're very excited to be here in Alberta developing this. Looking at the technology and what this does, and I've got another slide. So last week we announced that our pilot prototype was commissioned and operational. And what this pilot prototype is, what the DLE technology is, and what E3 has developed is a what we call a sorbent. So it's a chemical material that's in a bead form that we put into a tank, and you interact it with our brine. And when you interact it with Leduc brine, and this has been demonstrated right now at lab scale, that's where we're at, the lithium molecules in the brine are attracted to the material and stick to it. And so in a scenario that looks like a water softener, so this is ion exchange, and a scenario that looks like water softener, which means that ion exchange and this type of technology is very commonplace. You can see it in action all over the world. In fact, even gold processing is similar in terms of pulp and resin to the type of processing that we will use. The secret for E3, what we have developed, what is our proprietary technology, is the chemical itself. And that development we announced in June in terms of the research and development of that has been completed. So we have this sorbent that is going towards commercial operations now. And what that means is that the chemical works, we can extract lithium onto it. What we're doing in the lab right now is demonstrating that we can do it in a process environment. So the commercial form of this will be a machine that basically interacts the brine with the sorbent, takes the lithium out, and lets the brine go back into the aquifer. Every so often, this material fills up with lithium, and then we have to strip that off. And the way we do that is we use significantly less volume of fluid to remove the lithium than we did the original brine. So we get all of the lithium off that's on this material into a solution that's a lot less volume. So we get high-grade lithium. Because the material is so selective for lithium specifically, we get very little of anything else. So we get a very high-grade, high-purity lithium concentrate that happens in a passive environment, which means we just have to move the water from top to bottom of the tank. So it's a very low energy process, which is very good because we want to scale this to commercial. And one of the benefits to ion exchange and this type of processing is that it scales very nicely because it's modular. So the size of our pilot will not be that much smaller than one module that will go into the commercial operation. And that allows us to scale a lot more effectively. It also de-risks the commercial cost of this because we will know with a lot more accuracy when we get to that level what the cost of one unit will be, and we'll just times it by however many units we need. As I mentioned, we talked about the pilot prototype, and this is a screenshot from a video that we did talking about it. This is in the lab, and I just wanted to put this out there. It's a terrible picture of me. I wanted to put this out there because what's behind me is the inner workings of the prototype. It's all the control mechanisms, the computer that controls. This is fully automated, so there's automated pumps and valves, and that big gray thing on your right is the big control box. So this machine, which is not in the frame because we didn't want to outline, give that side of it away. But what's in the frame is all of the controls for it. And because it's fully automated, we're able to run it 24/7 through computer operations. So where we're at with this is that we have the construction of the prototype has been completed. We've completed the commissioning of it, so it's operating. And we just, as of this week, completed the initial testing. So we're waiting for those results to get back so we can set the operating parameters for this. And then the first major test that we plan to run will start November 8th or so. So we hope to have results back from this in terms of the first major test for this prototype, hopefully end of November to mid-December, sometime in that time frame. So keep your eye out for that. I think that's going to be very important news for E3 as we progress our technology towards commercial. Of course, this technology for us, it's one piece of the business model. There's been other companies you've seen that have announced big investments, guys such as Lilac, that are just the technology. E3 has a 7 million ton resource here in the province. And from my perspective, this is really the blue sky for the company. And the reason for that is that if this technology is successful and we can demonstrate it can scale to commercial, which is what we're working on right now, we unlock a massive opportunity for the province and for E3 Metals. And what I mean by that is that we outlined a PEA at 20,000 tons, which gave us a $1.1 billion pre-tax NPV. That is phase one. That is the initial development. We believe that given the amount of brine we have in this resource, that we can scale that 20,000 tons to almost 150, to as close as 150,000 tons, which means that we can grow our production to be one of the larger lithium producers on the planet if we're looking around the landscape as of today. So this is no small lithium project. This can be absolutely massive. And when you look at this map, how this works is that the white outline is our resource area. Or sorry, the white outline, the white outline is our permit area. The dark blue shaded areas, are our resources. And you can see that we only have about 1/3 of our permit ground under resource today, which means we still have expansion potential beyond our resources to grow this company. So for me, this really represents the blue sky that E3 can grow to as we continually de-risk our process and project towards pre-feasibility study and then onwards into construction. I mentioned ESG, and I think this is a very important piece of this because the question I get asked by the battery and car industry is, what is our ESG? Specifically, what is our carbon footprint? So when I look at it from that perspective, a couple of things are inherent to DLE. One of them is that we don't have tailings ponds or open pits. So we don't have this big surface impact. So we have very minimal land use. In fact, the philosophy at E3 is no net new disturbance. So we're going to try to go to as many current oil and gas sites that are being decommissioned and take them on and turn them into lithium sites. So hopefully have a net no new disturbance for land, for surface land. We also don't interact with the freshwater aquifer. So we are much deeper. We are a salty aquifer that's not fresh water. We can't drink it. And we plan to produce it. It's confined, so we can produce it, take the lithium out and put it back in the aquifer with no interaction to drinking water locally. The big thing that E3 wants to do here in the future is get to a reduced carbon emissions down to carbon neutrality. And it's an important thing in the landscape of electric vehicles. And it's an important thing for E3 as a company as well. We feel very passionate about this. The tangible, actionable way that E3 will achieve this is twofold. One, we're looking at wind power to provide a consistent power supply to E3's project. We actually have a wind farm on the property. You can take a look at those pictures on our website. And we will look to supplement that with a base load of natural gas. And we will, which is a local, supporting the local economy. We can take the CO2 from that natural gas, we can capture it out of the exhaust and put it into a carbon sequestration process. The Alberta government is promoting and looking to get started a carbon sequestration hub. This has been announced. You can go on the Alberta government's website and look at this. So they're trying to build a carbon sequestration hub in South Central Alberta, where companies like us can provide them our CO2 once we've captured out of our exhaust gas, and they will dispose of it for us. Now, E3 can do this as well. We can put it into our waste brine, but the hub allows us to do that and not have to make it part of the business. So it's a very important piece in E3 supporting that hub and the development here in the province. And that would make not just E3's project carbon neutral, but it would be all of South Central Alberta would start to move towards carbon neutrality. You know, this really just outlines a lot of the things I've talked about the Alberta government and being in Alberta. One of the things I haven't really talked about is the permitting. And it's a very important part because at the end of the day, if you don't have a permit, you can't build a project. We are likely to be governed under the Alberta Energy Regulator. There's a link to the regulations on this slide. Just to give you an example of some of the timeframes, an oil and gas well license, which is effectively your mining license, the ability to move the product out of the ground and back into the ground, takes about 4 to 8 weeks to get approved in Alberta. A pipeline license and a facility license are sort of in the 6 up to 12 month timeframe. So we should be able to receive all of our permitting within about 12 months, plus or minus, obviously. And that's a very important differentiator because at the end of the day, one of the big risks ends up being permitting, and being in Alberta, being in this industry, being very effectively very similar to an oil and gas company here locally has a huge advantage on that side of things as well. And I'll talk about when that really comes into play when I go through our development plan. So as I mentioned, E3 is a DLE project, which is the next generation, the new way of making lithium. It's a direct process using chemical extraction rather than evaporative extraction if you're brine. And the comparable also is hard rock mining. So those are the two on the left of this diagram, the two conventional ways of making lithium. We're not the only ones in the space developing DLE. I mentioned Lilac. Standard Lithium is a good peer. We do talk about Standard a lot because in our opinion, they are probably our closest peer. They've got a very strong trading performance. The best, there's a lot of similarities and differences between us and our technology and our resource and, that sort of level of things. But the biggest differentiator, I think, between E3 and Standard right now is time. So they've piloted their project. They've gone a long way to demonstrating DLE working commercially in terms of what they've built down in Arkansas and the developments of that. So for us, it's a good metric. We follow them pretty closely. I think it's worth the investors following Standard and using that as a benchmark for E3 because I think that we're on the same path towards commerciality, just a couple of years behind. When you look at the development plan for E3, right now, the DLE technology still remains front and center. It is the majority of our time and energy, and therefore money we spend on the project right now is on the DLE development. All guns blazing right now to get this proven out in a field pilot. That is our goal, to demonstrate that this can work in a scale down, but not that dissimilar from commercial operations. So where we're at right now is we've got this lab pilot that's being commissioned and we're running it. So the next step is what happens with that lab pilot, the prototype, is it provides us all of the performance data that we need to engineer and design a pilot. So we anticipate having that data collected by the end of this year, and we start engaging companies to build the pilot in the new year. So that's the plan. While that's happening, the other pieces of the work that's going on, Equally important, the aquifer management plan. So how are we going to move the brine around and how does that look? The result of that finalized in a measured and indicated upgrade for the company. The other piece of this is hydroxide production. So another big benefit to the prototype is that we can now produce extremely large volumes of our concentrate. And keep in mind that because we reduce the volume of fluid by so much, it's hard to produce a lot of concentrate to test in a commercial scaled equipment. And so one of the things that we can do now with this prototype, because it's fully automated, is run it for a long time just to create concentrate. We can ship that concentrate to facilities that have technology developed for lithium hydroxide production and start testing it at that same scale. You know, we're talking hundreds, if not thousands of liters of concentrate at a per test. So big testing to understand the nuances of hydroxide. All of that, and we have made it before, so this is just looking at it from a bigger scale, just to clarify. All of that accumulates into a pre-feasibility study that we aim to have out by the end of 2022 or early 2023. And looking at how we get to commercialization, I've talked about 2021 to 2023, so we've got the prototype going on now. We aim to start designing and building and then operating the pilot next year. We will be doing the M&I upgrade next year, and we'll be looking at the pre-feasibility study as well, which sort of accumulates out of all that work. Once the pre-feas is out for us internally, that's a construction decision. And if it is positive, which we anticipate it being, we move on towards the commercial permitting, which is, as I mentioned, so that starts with the PFS complete. We start project finance and we start the detailed engineering design of our process facility. So we aim to have drill rigs out putting wells in the ground by the end of 2024 or so, with first commercial lithium by 2025 to 2026, somewhere in that range. All right, so that wraps up the presentation for today. I appreciate you guys listening in, and maybe we can open it up to questions.
Great. Thank you very much, Chris. Very informative presentation. So we do have quite a few questions already. So, and just a reminder to everybody that you can type your questions into the chat box. So let's get started here. Bear with me, sorry. Could you comment on the pressure we've seen on the stock recently?
Yeah, I think the best thing that we can, obviously we don't know exactly the details of who's selling that type of information is not available in Canadian companies, but what we can best guess it's related to is we've had about $4.5 million worth of warrant exercises come in over the past little while. So my anticipation is that it has something to do with that. It does put pressure on the stock, but it also brings in a significant amount of money to the company and reduces that overhang. So it's actually pretty exciting, but the pressure on the stock is obviously not that great. So
okay, so that's something that sounds temporary, somewhat expected, and if anybody's valuing this through your fully diluted shares, nothing changes then.
Yeah, I think it's a good opportunity to buy right now because it's creating some sort of artificial downward pressure based on just that volume coming in.
Okay. Now, you mentioned at the top of your discussion that you sort of relate well to oil and gas companies. You know, on your property, do you have any other mineral rights, including oil and gas rights, that you might be able to have some opportunity with? Yeah,
we don't have any what they call P&G rights in the province. We have what's called metallic and industrial minerals. So all that outline that I showed on that map, we own all the metallic industrial minerals for the crown lands in that block. So yeah, you know, in the Leduc, it's been producing. It's an oil asset that was discovered in 1947 by Exxon, and all we're really doing is repurposing it for lithium. But it's been producing oil since the 40s. There is some production left, but it is very minimal. So yeah, it is on its way from and your energy transition. I think this really epitomizes that, because we are in a literal sense transitioning this aquifer from an oil and gas aquifer to a lithium aquifer.
Okay. Let's talk a little bit about ESG. You know, maybe just discuss how important ESG is in the development of the project itself.
Yeah, I mean, inherently to DLE projects, just because you are chemically extracting lithium, so you don't have an evaporative process and you don't have a hard rock open pit mine, there's just a lot of things that you look better on from an ESG perspective. You just don't have the footprint. You don't have that interaction. You have an open pit where you have to pump the water out, and then you have to filter the water through a series of ponds to allow it to go back into the environment. Those types of things, they're not involved in a DLE project, right? It's all closed loop system. You don't interact with the fresh water. So from that perspective, DLE just looks and is better from that perspective. The carbon footprint, though, is something that E3 will need to work at. We use power. It's the majority of our energy consumed is power. So we have electric pumps, and we have electrolysis process that we're looking at designing for the lithium hydroxide production. And the two of them consume a lot of electricity. So we have to generate that electricity somehow. And that's where our carbon footprint comes from. So yeah, it is for us. I think that going to carbon neutrality is important. And we actually, Liz, my VP, has been working on a project for the past 6 months on evaluating the options and looking at the different nuances of the, when we do the pre-feasibility study, that the results of that will be included in the pre-feas. We'll also be producing alongside of it an independent LCA. And so they will take the pre-feas and they will evaluate our carbon footprint based on that and our other metrics like land use and all the other things that go into that LCA. And that will be published as a third-party report. So investors will be able to read that and go through it and understand exactly what the full impact of each of these projects. Because it's impossible to produce a mineral in this world without making at least some impact. So I think what's important is transparency on that, so you can be judged against your peers.
Right. Okay. I've been marketing over the last couple of days here in the UK, and I will tell you, meeting after meeting after meeting is ESG conversation.
Yeah.
And I would say Europe is probably easily 2 years ahead of North America on the ESG thematic, and it is an important part of their investment thesis.
And it's the same thing for us. We get asked it a lot, and my perspective is when we look at like the project financing and our path down there to build the facility, ESG is going to be a metric that we're going to be gauged on to get that project financing as well. And so on all levels, I think it's important for companies. We have the opportunity. We don't have trucks and shovels. We have a very centralized carbon footprint, right? We have a power source, which is going to be probably a natural gas turbine. So we have the opportunity then to dispose of that CO2, sequester it, and reduce our emissions using that, which is technology that's out there in the world. Shell and several others have pioneered it here in the province, so it's local to us. So we have the opportunity to do it, and I think that does separate us out, is that we can deploy an existing tech and we can get to carbon neutral.
Okay, sounds good. Let's talk a little bit about the direct lithium extraction and the technology. And, sometimes the mention of technology gets investors a little bit nervous, but, this really isn't new technology. You're planning to use an ion exchange circuit, and the resin that you're using is really the new item. Uranium industry gets half of its global production from ion exchange, for example. So what's here is the application to lithium. So maybe can you comment on how your extraction might be, let's say, similar or different from Lilac Solutions or Standard's plans or methods?
Yeah, I mean, inherently the sorbent or the resin is different between the applications, but the process design, depending on some of the nuances of that resin, are somewhat similar. So, and you're right, it's not new tech, and I think I saw a comment about building our own versus having someone build it for us. And our preference is that we actually don't even have to have someone build it, that we can go to someone who actually has a process unit that's already built and operating, and that they rent out to test their process design or even lend out. And so, for us, I think that that's one way that we can also speed up the project development and de-risk the commercial side of this, because if they have a system that they're lending out to test in a pilot scenario, they have a commercial system running for that somewhere else or multiple places where it's already operating. So not only can we speed up the time frame to get the pilot out the door, but we'll also be using proven commercialized technology. So absolutely, that is a goal for us. When you get into the nuances of it, every material is different and every material has different process parameters. And so one of the things that the prototype allows us to do is define those with a lot of detail and provide them to these vendors to analyze and outline to us what they can do for us.
Right.
So yeah, a lot of that information will come in the early new year, but it's a huge push for E3 to do exactly that.
Okay. And any comment on how yours differs from some of your competitors?
It's hard to say because I'm not an expert on other people's DLE technology, and I probably know more than I should, at least talk about publicly, because we've obviously had conversations. So I will say that the chemistry is different. The process design at the end of the day may look somewhat similar to some of the peers, depending on the nuances of the material itself. Things like grain size of the material come into play when you look at processing, because what you're effectively doing is you're a solid liquid separation machine. So you interact a solid and a liquid being your brine, solid being your sorbent. You mix them together for a certain amount of time, and then you pull them apart. And then you mix your desorbent, and then you pull it apart, and then you mix your brine, you pull it apart. So that interaction can be done in several different methods. We use a column in the lab, but there are other process methods that may actually work better for us as well. That may separate us. We also think that we have a very highly efficient sorbent relative to our peers because of the speed at which we take the lithium out and the recovers we get at 75 milligrams per liter and that sort of thing. Of course, that's just a lot of suspicion based on what limited information is published by our peers. So, but we do have extremely high, kinetics. It's called very fast reaction times, which means that we can interact the brine and the sorbent for a very short amount of time, which reduces the size of the equipment that we need and a bunch of other parameters that reduce costs and processing risk.
Right. Okay. And as far as the technology goes, who owns the technology? You've got partners helping you develop it, researchers working in the background. Are they going to be paid on the fly, almost like a royalty, or are they working with you now under contract?
The technology was initially developed by our partnership at the University of Alberta. E3 and that group share the intellectual property ownership, but they have given us a license for it in perpetuity, royalty-free. So we own the license to what they developed with us. E3 has also been developing without them since 2018. So there's been new advances that are wholly owned by E3 Metals. Okay. So either way you look at it, E3 wholly owns the technology. We do have patents out. We have patents pending. We'll have new patents coming. You build a body of patent literature to build a series of protection around your intellectual property, and that is definitely something that we deploy. So, it's ours from all intents and purposes.
Okay. And with your first prototype lab getting built, what sort of purity levels are you expecting from that phase of testing? And are you planning to publish them like Standard did?
Yes, we anticipate high purity, and we will publish it when we get there. So as I mentioned, part of the work that we're doing is to test, commercial methodologies in labs of vendors who make processing equipment for lithium hydroxide production. And so the results of that will be lithium hydroxide. And we anticipate at least some of that being at battery grade as they go through their own refinements, because there's a cleanup, a polishing stage in between the DLE and our DLE and the hydroxide, because you still want to get the purity level up. So there will likely be quite a bit of battery grade, quote unquote battery grade hydroxide coming out of that test work. And we will definitely be outlining the results of that to the market once the testing is complete. So we're going to do a bunch of testing and then publish those results at some point. And the goal is to, start attracting customers as well with that, right? We can start, once we pick the methodology, we can go off just producing hydroxide to start our sort of business development and sales on our product. So that's another goal. You need to qualify, as you know, so it takes a long time, 6 to 12 months of continual product to get qualified with some of these companies. That won't happen until phase 2 of the pilot starts. So phase 2 for us is the hydroxide going out to the field, which would be sort of post pre-fees.
Okay, so at this stage, really, you're really just looking for proof of the sorbent technology, that it's working.
Yeah, that's the high risk, right? For us, that's what we need to de-risk mainly. We're obviously de-risking the hydroxide in parallel because we're testing it, but we're testing with companies that have commercial equipment that they're just running through in their lab environment. So the risk of that not scaling is much lower than the DLE that we're developing from scratch. So it is a huge goal, I think, a huge value creation exercise for E3 to de-risk that DLE technology.
Yeah. And then how quick or how long of a field pilot process would you need as well?
I mean, the pilot's going to run for probably 3 to 6 months at any given site. And we plan to move it around. So right now we're working with an oil and gas company here locally as our first site. So they've got production from the aquifer, and they've got lithium brine at surface. They take the oil out, and then we want to get access to that brine to take the lithium out. And so we're in negotiations on that. Eventually E3 will drill our own production wells. So we're going to go out into the aquifer where we actually plan to produce lithium, which is nothing to do with oil and gas at the point. The oil and gas portion of this aquifer, even before they start producing, was very small relative to the total volume of fluid and relative to the size of the aquifer. So we step away, if you're looking at the map, westwards, and we start producing in a commercial scenario. That's where we'll likely start producing, is somewhere to the west of where we're currently active in terms of our sampling and the initial pilot potential location. So, but then that'll be in the actual production area. We'll drill some holes. We'll have information on all of the brine, the producibility of that brine. All that information is the reason we're doing it. But it also gives us the location to place the pilot. So the second location can be in an actual, like, the production area.
Okay. And would you be designing and building your own commercial modules as the field pilot is going on? Are you really going to need to change the equipment much?
Yeah, I mean, there's lots of ways that we can build this out, in a stage 2 commercial. Because these are modular, we could build a bunch of them and start producing on the back of what little brine is being produced through oil and gas, and start looking at some pre-revenue in that avenue, or testing in a little bit bigger scale and that sort of thing. Really, for that, it just comes down to capital, and what we have to deploy and where we want to de-risk what. And most of that decision comes post pre-feasibility study. So you look at that and you look at where your risks are, and you decide what you need to do to finalize that de-risking before you build a facility and spend $600 million in capital.
Right. Okay. Do you anticipate expanding your production rate beyond 25,000 tons a year, either upon startup or soon thereafter? And what sort of life of mine expectations might we look? And based on
the brine that we have in place right now, the 150,000 ton number I quoted is sort of the max production based on our resources that we have outlined today. And based on the brine volumes, we can produce that for 35 years. So that gives you an idea. It's 150,000 tons for about 35 years. That's just on the current resource base we have. That doesn't include the other 2/3 of the ground that we hold.
Right. Okay.
So it's a big project. Get it, yep. And it doesn't obviously turn on all at once. It builds, and you pay off some capital, and you turn on another process facility, and then you pay off that capital, and you turn another one. You sort of scale, supplemental growth. Very, very thoughtful growth, but still can get to there in not that short of time. Definitely meeting the market. And of course, if someone comes along and says, we want your lithium, here's a check, make it happen, we can make it happen, because each project site that we have of the 3 resource areas can do about 50,000 tons each, roughly, plus minus.
Okay.
So you could be building 2 concurrently if the capital is there to do it.
Right. And this is a modular construction, right? You can scale it up as you see fit.
Yeah. And most things are modular. Not everything, but like the wells are modular because 2 wells is double the production of 1 well. So, that's, if you want to double your production, you have to just double the number of wells. The DLE side of it is somewhat similar, and the hydroxide side is somewhat similar. and the rest is, the process facility itself, the building and that. But you can build that. It's fairly expensive. You can build a building be big enough for your total production and grow within it. So.
Okay. Will you be discarding the lithium-free brine back into the same location of the aquifer it is found, and would that dilute brine grades as you're producing?
Yeah, we get that question asked a lot. That's the reason for our aquifer management plan. Because yes, we do put the brine back in the same aquifer. The oil and gas area is probably a good starting point for the disposal because we believe it's lower grade, and we look to demonstrate that hopefully in the future. But more so, it's got oil and gas, and we don't really want to be producing lithium in that same area because we want the raw, unimpacted brine from outside that area. Now, as I mentioned earlier, it's a very small portion of the aquifer. But if we put our brine back into that aquifer, we increase the pressure of that portion. And this is a commonplace process to increase your oil production. They call it enhanced oil recovery, by adding additional pressure around the oil and gas area. So we will actually increase, it's kind of ironic, we'll actually increase or could potentially increase the oil production by volume by putting our brine back into and disposing it in that thin oil area. But absolutely, we need to manage the disposal and production. So the disposal will be, if you look at our PEA diagram for the 20,000 tons for 20 years, it was 15 kilometers away. And what that means is that it takes 20 years for that lithium void brine to reach our wells 15 kilometers away. It takes 20 years. And that's based on the reservoir modeling that we've done. And we have lots of data to back that up based on oil and gas production in this aquifer, and 4,000 drill holes into this. So we've got lots of data to back that up. It's something that we continually improve, obviously, in the pre-feasibility study. When we get it out, will be one next level improved on that. So there'll probably be some changes to it, but we're always cognizant of that. And how we've managed it from a resource perspective, our resource is different from our peers because it's 50% of the total lithium in ground, whereas all of our peers are 100%, or most of the peers are 100%. And why we've done that is we've said, look, there's going to be a dilution. And rather than outlining a big resource, like a 14 million ton resource, and then clawing that back when you do the reserve booking, because you have to, you sterilize a portion of your aquifer, we've already pre-sterilized a portion of that aquifer and said there's a portion of this we won't produce lithium from because we have to use it for disposal. So we've actually cut the resource in half to account for that. So very conservative, because the actual number is probably more 70-80% of total production, but we've been very conservative, and the M&I upgrade will be a lot more detailed. So we'll have that number, if it's 70 or 80%, that wherever that sits, that'll be the actual number in the M&I.
Yeah. Okay. Thank you. Would you be able to use orphaned oil and gas wells at, say, potential production wells or injection wells to help save capital? Or is there anything really different about drilling and completing wells for lithium brine versus oil and gas?
There's not a lot different. If it's the same size casing and tubing, from an oil and gas well, it could be the exact same drill rig, crew, steel, everything could be the exact same. So the answer to that is yes, maybe, because the other part of this is the location. So oil and gas wells are in the oil and gas area where we don't want to produce from. So it might give us an opportunity to dispose of, like a well to dispose our lithium void brine into that area. As we mentioned, that's a good potential disposal locations at oil and gas area. One of the things, though, that I've talked about as well in this is that we want to have a no net new disturbance. And so one of the things we can do is we can go to well site locations where they've drilled the hole, and maybe we don't want that well. Maybe it's not completed into Leduc, it's in a higher section, or maybe it's an old well that we don't want to get access to because it's from the 60s and it's no longer sort of has the integrity we need. We can abandon that well, but we can use the site, which already has power, already has a road access, already is disturbed, and we can put our wells onto that location and therefore not have any new disturbance and reduce the cost of this auxiliary infrastructure that's required to run that well. So right. The two are options, and we're exploring those in great detail right now. It'll be part of the pre-feasibility. It wasn't in the PA. In the PA, we assumed, for conservative sake, 100% new wells.
Mm-hmm. You said power is already on site, correct?
Yeah, there is power running through this. There's the main trunk line, power line. I can't remember. It's like 140 kVA, something like that, running right through the middle of the property. So we have lots of grid power. We have natural gas, also the main trunk line that runs to the United States. It runs through the property as well. So we have access to both power, but we'll probably go the natural gas route to generate power, and we have access to the natural gas as well.
Mm-hmm. Okay, good. On the permitting side, can you maybe expand on any support or consultation you have with the province of Alberta?
It's hard to get into the detail. A lot of these conversations, we don't know, no companies talk about publicly because the regulatory body doesn't really want you to. But the real, we've been very active, I guess, is the best thing I can say. So we're in regular consultation with the Alberta Energy Regulator, with Alberta Energy, with the Minister of Energy here, Minister Savage. So we keep in regular contact. We obviously don't have a permit to apply for today. So we don't have a regulatory need today. But we have been for the past 3 years very active in providing them information. We were participants. The Alberta government last year announced a critical mineral strategy for the province. And we were they announced that actually from E3's office. And we were one of the participants in information that they were gathering to make some changes to the mineral, I guess, act, it would be here in the province to basically, when you look at it, it's minerals from brines. So that's the big change that they're making right now is, minerals from brines, which are different than minerals from hard rocks.
Right.
So yeah. No, the short answer is we've been very active. They've been very supportive. And, we'll just outline that as information comes public.
Mm-hmm. Okay. And it looks like the Canadian government intends to help Lake Resources build its Argentine project. Do you anticipate any help from the Canadian government? Do you think they'll invest in your efforts here?
Yeah, we have grant applications in with the federal government that we are very hopeful on. They're big dollars. So, we'll see how those pan out. There's no certainty, obviously, until it's granted. But even with the federal, we were very active with the previous Minister of Natural Resources. We hope to be again with the new Minister of Natural Resources, who is from the Vancouver region. So, we're on the federal side. I think if you looked at I'm assuming there's a lot of Canadians on this call. If you looked at the Liberal platform that came out during the election, there was a lot of information there and a lot of funding towards the EV space. And in my mind, like what's more important than like a subsidy on an electric vehicle is bringing the electric vehicle supply chain and manufacturing into Canada, because that's how we really take advantage of it. Is not by buying the cars, but by becoming a major component to the manufacturing. And it's actually a topic I'm having topic of discussion with the Alberta government as well to say, hey, like Alberta, we're open for business here. If we're gonna have hydroxide manufacturing, let's bring battery manufacturing, let's bring cathode, let's bring the ecosystem here and build that, because if there's 2.7 million tons of lithium demand coming in the next 10 years, there's the equivalent in battery manufacturing coming in the next 10 years. So let's get a piece of that here locally, and let's build that expertise up. So anyway, I think that the federal government's on it. We're hoping to see some real action with this new the new government, I guess, newly elected government here to make moves on that. But it was in the platform, so.
Okay, let's hope they step up. So,
yeah.
Okay, we're coming up to the top of the hour, so maybe let's get through some of these final questions on the company. Cash and budgets. How much cash do you have on hand, and how long will that last? And then maybe just comment on a proportion of spending versus exploration versus proof of concept of the technology.
Yeah, the company has about 12.5 million plus minus from a raise. We also have about 1.3 still to come from Alberta Innovates. That's funding the pilot side of things. And then we're going to have a new cash injection here from these warrant exercises. The majority of the money is being spent on the DLE development. It's our biggest risk, and I think from the shareholders' perspective, it should be the thing that we're de-risking right now. So I think it makes sense that that's where the cash is going. So we have a facility here in Calgary where the prototype has been built, and that's staffed with, between the lab staff running the equipment and manufacturing the sorbent and the auxiliary process engineers. There's 10 people that's going towards, and then we've got 15 on staff. The other folks are mainly in the sort of geology production engineering side. So the majority of the cash is going to go towards building the pilot. If we can rent it, or the manufacturing cost is less than we've budgeted, we'll start deploying capital to drilling wells. So we'll move that up in the time frame to get this done sooner. So that would be a big move for us as well. The production of hydroxide, that testing is also another key thing, but it's not that expensive relative to building a pilot. So it's a line item in the budget, but it's not a big one.
Great. Right. Okay. And then given our recent M&A activity, we've seen Millennial be bid for, Lithium. What assurance can you give investors that you plan to take this project all the way, that shareholders aren't taken out early on an all-cash deal?
Yeah, I mean, I think the biggest thing is that inherent to Alberta, which is different than like a junior mining company, companies build and grow from nothing, from one well to, CNRL being, at least they were 30 billion Canadian market cap. Like that type of thing happens in Alberta. We build companies from nothing to big, integrated production companies. And so that's our goal. We have the ability to do it. We can scale this. We can make it a really big project. The only sideline to that and caveat is that if an offer came on the table that was big enough, you would have to bring it to the shareholders and let them decide on that. Some offer from left field, but I think that right now, we want to create value for the shareholders. We think that by getting the DLE de-risked, we're going to create significant value, and you can just look at Standard and see what they've done, and a couple of the key steps they've taken, and including the piloting and then the production of their battery quality stuff, and then the listing on the New York Stock Exchange. All of those things have created a lot of value for that company, and I think that E3, it would be a shame not to let E3, take the time it needs to get to that level, and hopefully create that same, level of value as well, so that we can, create some significant return from this point with our shareholders forward.
Yeah, sort of a related question, maybe to what degree are you still pursuing a partnership with a larger firm, somebody that might have deeper pockets that can help you develop this, and how far out might you be from having something formalized?
It is something that we are actively engaged on. So a strategic partner that would be, our goal is sort of someone who would support the commercial development. So, we have a construction bill that's going to be looming, in the order of 600 million. So funding that, at least in part, and providing a backstop to that is the goal for a strategic partner. The timing, we're in no rush. We don't want to do it too early. We have the ability right now to raise capital in the public markets. That's been really good. I think that's going to continue to be really good for the next while. And so it's not a critical path for the company. We don't need it to proceed. We don't need it to finish the pilot and de-risk that. All of those things will create value, and then hopefully, the strategic comes in a bit later on. But sometimes you can't control that. If the offer's on the table, we would obviously be considering it very seriously, because it is a goal for the company. Mm-hmm. We are in pursuit of that, because these relationships take a long time to build and mature.
Right, and I guess we'll finish it up here. Put a couple of questions, related questions together. How much of your capital is currently coming from retail versus institutional clients, and do you have any plans for TSX or New York Stock Exchange uplisting soon?
In terms of capital, the last raise we did out of which was an Echelon Canaccord raise, was mostly institution. I would say 95% of that $8 million that came in was institutional capital. We obviously can't tell specifically who has positions in E3, so we can't give the detail. we don't know the detail, but my sense is from conversations that we have a lot of institutional buying on as well as retail right now. So we're probably a good mix.
Okay.
Yeah.
Good. Okay, well, thank you for joining us today, Chris. Chris from E3 Metals. I'd like to thank everybody else for tuning in. Reminder that Red Cloud Securities will be hosting another webinar on Tuesday. We have Libero Copper and Gold. So that's Tuesday, November 2nd at 2 p.m. Eastern. So have a great day, everyone. Thank you for joining us. Thank you, Chris.
Thanks for having me on.